Hello, everyone. Good morning and good afternoon, depends on where you are joining us from. And welcome to our very first One Vision LinkedIn Live. My name is Theo, and I'm the founder of Unconventional Ventures. I'm joined by my co-founder, partner in crime, Bradley Limer, for the session. And today we are super excited to be chatting with our good friend, Lisa Moyle from VC Innovations. And welcome to the chat, Lisa.
Hello, Theo and Brad. Thank you so much for having me, especially for your first one.
I know, you got to be our guinea pig.
Yay. I like the music.
Thank you. We're trying to get people wake up and excited.
Especially on the West Coast, yes.
Oh, sorry, Brad. That's with much love. So what's been happening in FinTech this week and what's interesting in the news? I know there's always something fun, but what caught your eye, Lisa?
Well, I think that the fact that Varo Money has now become Varo Bank is pretty exciting. The first consumer fintech to be awarded a national banking charter. And I think they join like maybe 7 or 8 others who have been awarded one since the financial crisis. And I think it's exciting news. I think it certainly opens up, strategically a whole new set of pathways for them. I actually spoke to Lisa Violet, who's the chief auditor at Varo Bank now last week. And it was really interesting hearing her reflection on the process, the length of time. It's certainly not something for the faint-hearted. But obviously, she and the team are super excited about what they've achieved. And it was interesting also to hear someone be so complimentary about the regulator and the process. So that was very interesting.
I think there's probably more fintech banks than de novo banks that have started just in the last week than what traditional banks have in the last 10 years. So when there's talking about fintech, you got to talk about things like what just popped up the last couple of days. Facebook pages started kind of bubbling back in the news and what's going to happen there. There's the surge of Bitcoin that we could talk about. But yesterday, a rumor came out about American Express acquiring Kabbage. And, Kabbage, of course, is one of the largest and sort of most well-known small business lenders. But what's interesting here, of course, is that it's not exactly selling or potentially being acquired for its value. We've seen a lot of small business lenders, sort of either be acquired or go the IPO route. On Deck was sold to Innova International for $90 million, and it was valued at over $2 billion. Lending Club, Funding Circle, they've already proven that the IPO route for these type of lenders is very difficult. So while Kabbage was looking for like $1 billion, I think, the value of this deal is supposed to be about $850 million. It's a great match. Amex is the largest small business credit card provider, and Kabbage has one of the best platforms. When I was at Santander, we looked at a lot of these and invested in Kabbage and several others. And so, if Kabbage was invested up to about a $1.3 billion value, what are we going to see? What's going to happen to all of those unicorns in the space?
It's interesting. I don't know if you guys caught the latest CV Insights FinTech funding deck. It just got released a couple of days ago. And it talks about how the funding has rebounded in the second quarter of 2020. But the amount of activities, the deal activities, continues to fall. So I think what we're seeing is a few more mega deals gaining ground, some of the more mature fintech companies being able to raise additional money. And it seems like the sector overall is maturing. And hence, Brett, to your point, we're seeing a few more filing for IPOs, or some of these startups, they're just staying private for longer.
Yeah, I just go ahead, Lisa.
No, I think that's interesting because, typically when you see, the kind of falls in GDP that we've seen and in a crisis, there's a flight to quality of all kinds. And I just wonder if like that increasing deal size, and the decline in the number of deals is part of that process that you see during an economic downturn or a crisis.
Well, I think it's probably it being right-sized, right? I think there was too much money in the space. You had SoftBank and other sort of mega financiers really just blowing out proportionate valuations. And, you have to wonder about Monzo and, there's sort of very public, meanderings in the space about their struggles financially. you're talking about startups that have hundreds of millions of dollars and they're still blowing through it because the cost of acquisition is so high. I just heard that Curve is looking to do a Revolut size raise, looking for $1 million and maybe valued Revolut size, multi-billion level very soon. It's like, so what's the reality? Is it going to be a buyer's market with fire sales every single week, like with On Deck? Or is it going to be, a continuation of sort of these mini mega rounds? I think the answer is a little bit of both. And I think, the way that we're going to see this end up in the next couple of years is that there's still plenty of money. But I think, as I always say, there will be blood, right?
Brett, it is indeed 7:30 your time. It's too early for blood. But I think it depends on who you ask to, right? If we ask our good friend Arun, he will say, yeah, that's just way too much capital going around, and that's not a good thing. I think for me, the one thing that's been on my mind, if we're talking about top news and what is around unemployment, you just can't escape it. Every single morning, I try so hard not to doom scroll, but I end up doing it. So according to the latest report from the Labor Department, more than 32 million Americans are receiving some form of unemployment benefits. Now, that is a staggering number. And if you think about it, what we have seen even before the pandemic, there were a lot of households that were living paycheck to paycheck. And so if you think about the impact of COVID-19 and the recession and businesses closing or not being able to open to full capacity, how can we provide better support to all these people? And a lot of these are low-income families, so-called essential workers, who have to make the hard choice of putting food on the table versus keeping their family safe and healthy. And that's really, really hard. We've seen banks offering mortgage holidays, credit card payment holidays, deferred loan payment. But all of these are just putting things off, right? We're pushing them a month to another month to another month. You still have to pay it. And so how will these people ever catch up, and what can private and public sectors do better and rebuild better, right? So some of the things that throughout our podcast, we've been talking to our guests, how do we close the digital divide? Right? In the US, it's staggering. 40 million people still don't have access to broadband. How do we help create upskill and reskill opportunities in different local communities? That's important. How do we offer paid family leave? And how do we help women re-enter the workforce, right? The returnship opportunities. How can we do more of that? Those are all a lot of questions that need to be answered, but I think is going to be massive opportunities if we do it right, from both banks, financial institutions, education institutions, and governments to do better.
Yeah, absolutely. That's the big to-do list, Thea, with a lot of levers that have to be pulled. But, if the one promise that we thought about fintech and better banking supported by technology was their ability to know their customers and know their customers' need, right? That, where the impact of greater personalization is not just tailored ads, but really understanding proactively how customers will be impacted by, a massive economic shock. So I was chatting to Jim Maurice the other day, and we were talking about credit unions and community banks and how the small ones, some of the really small ones in this crisis in the States, have really pivoted quickly and proactively got in touch with their customer, right? We know that the way that most people respond to particularly a personal financial stress is to hide from it until actually the cost of that becomes much greater. So I think the extent to which banks, fintechs can really pivot quickly and proactively, understand and support their customers through a challenge can make a difference. It can't make up for all those other levers that have to be pulled, which are, so many of them at the policy/government level.
Well, if you think about the impact, though, of what's happening in the space, people are still hurting regardless of the impact of fintech. Global economic conditions, have quickly eroded, and while some economies are coming back, the U.S. especially has been hard hit. The last quarter, I think we saw almost 10% down on GDP. We saw a lot of jobs lost, as we just talked about. The the impact of this on the startup community and for banks because of customer behavior changing is going to be significant. What other ways do you think we're going to see shifts happening?
Well, so it's interesting, Brad, you talk about, changing behavior, changing landscape. And we talk a lot about that, especially, in some circles, the death of cash, right? How Dash is going to just, in a few years' time, disappear. Call me cynical. I'm still a cash person. I love my Apple Pay. I use it, but I still like cash from the perspective of it's something I can use to teach my kids, because it's something you can feel, something you see when you're taking out that, oh, wait, my wallet is empty. I don't have more money anymore. So I think there's still a lot of things about cash that it's an emotional attachment that you can't really replace it. And so, as much as we keep seeing more people embracing digital payments, right? I think PayPal came out with a report a couple of months ago that says, oh, wait, surprise, the over 50 demographics is the fastest growing, market since the pandemic. They're using PayPal. Yeah, okay. A lot of people do use that. I wonder, though, how many of these habits will continue once COVID-19, the fear of the virus subside?
I mean, it's interesting because I've spoken to a lot of fintechs who, have noted the increased uptake in digital, right, across the board, and among those groups that we claimed were the most difficult to switch to digital. And, I don't think they'll completely backtrack. But, there's also, it was interesting. I was reading about branches the other day. So if you walk down my local high street, there's a massive queue for the 2 or 3 local banks that are along the high street. And I think there's a number of reasons for that. When people are anxious, they want to speak to someone. There's been widely reported here that people have really struggled to get in touch with their financial institutions. They were getting messages like, please don't try and contact us, just because of the sheer overload, right, of contact. So I think for some behaviors, and obviously this varies across groups, there will be a lasting change. There's a good chunk of us that are working from home now. We're doing more and more remotely, and I don't think that will just slip back. But I don't think we can forget that there is a slice of the population, for a wide range of reasons, not linked to age, specifically, or other key characteristics, that go into branches for very particular reasons and also continue to use cash.
I think the challenge there, though, is that banks weren't set up to be able to do, sort of branchless banking for everything. It took us like 15 years to figure out that the cloud was a good thing, or that remote work was a good thing. So I think that that's going to be one of the interesting things to watch, is like how banks return to work, because everybody now has been so used to remote work, and the majority of people that are able to work remote say this is actually something that we want to do. So we're going to see a lot of office space shifting hands. We're going to see a lot of leases that simply aren't renewed. And for startups, this is really what they were made for. They have remote teams, distributed teams, and the business model around what we call fintech, that 10 years ago wasn't even a thing, has created opportunities for them in dozens of spaces across thousands and thousands of startups. So I fully expect, this period around COVID-19 and this pandemic to create more opportunities than even the Great Recession itself. So, the bank industry itself, if you think about it, was like, they had this great opportunity 10 years ago when just everything was going and falling apart. And they didn't take that moment, quite the opposite. And so the rise of fintech is this moment for redemption for everybody to say, how else can we help our customers? And talk about branches a little bit more, because people still use branches. People still need to like physically talk to people. So how are we doing a better job of doing that?
And I think we're a ways off from replacing that, particularly when it comes to certain types of activity. In the UK, for example, if you, and I'm not talking about the digital banks, I'm talking about the banks that have a physical presence, the high street banks. For every single one of them, As far as I know, that hasn't changed. If you even try to set up an account digitally, the final step, you will have to show up in person in a branch. And, that's not a fully digital experience, and there's still a ways to go. And I can imagine, the stories that you hear about teams being sent to work remotely. In fact, it's worked incredibly well, given the fact that they weren't fully prepared in all aspects, right? But on the other hand, the interesting thing about bank branches and thinking about, those high street banks is that is the only competitive advantage they have over some of the digital banks, is the fact that they have a physical presence. So it's really interesting when you think about the dynamic and the role that branches play. And students still, I think I read 95% of students in the UK still set up with a bank that has a physical branch. Typically, when they land on their student campus, and there's one right in front of them.
Yes, I remember the first thing I saw on the first day in college was a big table set up by a bank that says, show your loyalty to your school by signing up a credit card. That was perfect. And I think they still do that. Speaking of branches, we had a question, Brad. Do you really need branches to talk to someone? That question was directed to you. I'm curious to hear what you say, and I actually have some feedback on that too.
Well, the challenge is this, right? So the other day I'm like driving, one of the few times the last 4 months I think I've gotten out besides a grocery store, and there's a huge socially distanced line outside a national bank, and I'm like, why are these people there? It's not like they're in queue to like get ATM, because there was another question about how much Americans love cash. It wasn't for the ATM, it was to go inside. And I just heard from a founder of a fintech yesterday that they were required to go into a bank branch to sign information for a mortgage that they were trying to get. So, no, the answer is no. You could do DocuSign for all of that, and you could do like 99.999 until the cows come home sort of percentage of banking remotely. But the challenge is that people still aren't there. And you could say whatever you want about, the way that customers behave, but in the US, there is still many, many people that want to go into a bank branch, and some of them are probably really sad right now that they can't.
Yes, there's that. Is this a good time for me to tell my story on how we signed up for our small business account? Because it took 3 visits to the branch, and it wasn't because I'm really keen on wanting to go to the branch and sit there. It was how it was done. The first trip was to go in there so he can print out a stack of paper for me to sign. The second trip was for me to hand in all the documents so that he can send it off to someone to type them in. And the third trip was finally to get my bank account, and that took 3 weeks. So think about that. No, I don't think we need the branches, but unfortunately, we're not quite there yet. Speaking of, I read an interesting article on American Banker the other day, because, we love community banks. We love smaller regional banks. And this one talks about a community bank in rural Pennsylvania that's working with Fintech to service the gig economy workers. Now, as we all know, this is a demographic that is severely underserved because banks didn't think they were profitable. And so this story is about how they are helping contractors, truck drivers, and other blue-collar workers that are in rural Pennsylvania to stay current on their quarterly taxes, to track the mileage that they drive in the car, and other deductible expenses. Because for anyone who is in the gig economy, this is the one big thing that is just a pain to keep track of, and is becoming more useful as a tool, because now we have more people that are either self-employed or they're supplementing their full-time job with gig work.
Well, I think banks just need to adjust, and these are good examples of banks that are adjusting to the way that we work. Coming from working in both community banks and community credit unions, I'm still a little saddened by the fact that they're the only portion of the industry that seems to be in decline in terms of numbers. We need more local community-driven financial institutions, and that's what gets lost when everything becomes a national bank or fintech, which treats their customers like users. The CRA regulation, which was enacted in the 70s, was originally designed to make sure that communities had access to financial services. But access alone isn't enough, right? You need people that actually are in the community that make sure that people's financial needs are met. Even though just a couple months ago in May, changes happened to make Syria more modern. The industry needs to make sure that no community is left behind, right, regardless of how it's defined. So let's switch gears. What do you think is going to happen to innovation budgets, and what do you think is going to happen, as more banks are reacting to all of their workers being remote, and then what are we going to do after all of this? I mean, what's going to happen next?
Yeah, I mean, I think the question around innovation budgets is really interesting, because the one thing that the crisis has shown that is that, digital is a necessity. It's not a nice to have, it's a must have. And, digital means not just serving your customers, but creating the conditions for your workforce to work in new conditions and deliver wherever they are. So there'll be pressure to continue that and accelerate that at the same time that institutions may be experiencing the kind of budgetary pressures, given their broader economic conditions, to cut back on those very budgets. So I think it's going to be a question of where where the priorities are going to need to be placed in the short term, and around the kind of conditions of the broader economic recovery in the longer term.
Yeah, I agree. I think there's just so much that financial institutions are working on right now, right? Between providing the PPP loans, allowing their staff to work remotely, which sounds much easier than how it is, and just dealing with changes in consumers, right? Because this is a very, very stressful time right now. A lot of people are going through a lot of things, and so I wouldn't be surprised if some of these activities are being put in the back burner. Although I am hopeful, though.
Yeah, I don't know. I was the head of innovation, as you know, have a large national bank, and it's hard for me to comment on innovation budgets because they've always been too small for me, because banks aren't driving internal change enough, and they're not acting in any way, shape, or form like startups, and they're not nearly as focused. But you have to have a little bit of budget to start those small fires that eventually start to pick up and really burn within the organization. So we need to do more, and we need to learn what's happening from the outside more than anything.
We do need to do more. I'm hoping that, if the last few months is anything that we have learned, that we still have a big gap to go. So continuing that thought, let's talk about how banks have been delivering funds to small businesses, right? Because that's one big theme, if you will, in the United States, as well as other economies. Small businesses are the backbone for our growth, literally, and recovery. And so banks such as Cross River, they are instrumental in helping fintech startups deliver a lot of the funds that they need. We have fintech providers like Amex that helped banks. Citizens in Oklahoma, Tap Bank in Utah, they deliver funds quickly. So there's quite a bit of activities, if you will, looking back in community banks, helping to get money to the small businesses that are needed. What lessons can we derive from the last few months as related to banking as a service and open banking, as opposed to what's happening in Europe and Asia?
Yeah, I think that's a really interesting question. I mean, picking up on Cross River, they delivered, I think, the fourth largest approval of those PPP loans. And that shows the power of, technology and understanding your customers' needs and being able to deliver. That's very similar to the example that you gave of the community bank in Pennsylvania, understanding its local community, the kind of services, pairing with a fintech, the services they need. You said banks weren't interested in providing for those customers. Quite frankly, they probably couldn't afford to, right, given their cost structure. But, a fintech in partnership with a community institution that brings the knowledge of that community, I think can be quite powerful.
Question came in about what percentage of budget should be about change the bank versus run the bank. And I think, we've got 80 to 85% of budget right now and run the bank. And that's part of the problem. When you think about the reaction to the pandemic, especially in the US around PPP and around sort of consumer driven opportunities to help customers, I wrote a piece in the International Banker called Summer Without Solace, and it identified a couple dozen good examples, and you brought some up already with Tab and Citizens. Virginia-based bank, Atlantic Union Bank, Texas Capital Bank, TrustStar, all of these banks were really instrumental in reacting and being very quick to respond. And you saw Chime actually deliver almost $1 billion of consumer funds directly through their app, even before the government had that available. MX helped people, take a 30+ minute application and to do it in 30 seconds. So this is why we need more budget directed toward response, directed toward agility, directed toward partnership. The industry needs to continue to open up those paths, and we need to find ways to help actually benefit the customers.
Yeah, I think, and we need to find ways to learn from the outside as well, right? So we had examples, Lisa, from your side of the pond, Starling Bank, that they've created connected card to help the older adults and others that are in need. And we have similar things, but it's provided by fintechs in the US. We have the Brazil-based New Bank that connect customers with essential services, with food delivery. I remember recently I was talking to a insurance company in Asia that's fairly large, that they repurposed their app, provided for not just customers, but everybody, a freely available resource for them to check their symptoms because of COVID and to connect them to resources to help them. So a lot of these things, there are things that we can learn from the outside. I guess one of my broader question is, why can't we do more of that in here?
Yeah, I mean, it's when you think about the power and the impact of collaboration, not just between fintech and financial institution, but between fintech and other, retail players and other providers, health service providers across different sectors, the potential impact is so great. The potential to do so much better is so great. But what stops that from happening? Sometimes it's probably regulatory frameworks around particular sectors that make that kind of collaboration challenging. Maybe it's, the kind of incentives in place, especially in the US where the health, healthcare alone is so complicated. How could you wonder how anyone finds their way through it? But yeah, when you think, about this kind of new economy in the digital world, the potential to collaborate and deliver great products that really give people what they need, there's so much more that can be done.
So let's end with this note. What is fintech? What does fintech mean to you?
Is that for me or for Theo? Do you want to start, Theo?
Sure, I can start. So fintech to me is using technology to do good. It's about using tech for inclusion and to empower people. It is not a magic wand, but it's a mean to an end. It's something for purpose. What about you, Lisa?
Yeah, I think that's a great description. For me, purpose is part of the way that I approach things, and that, you hope is an ethos that is part and parcel of every industry. I fear that's not always the case. But for me, fintech, at the very minimum is about doing things better. It's about greater transparency and hopefully delivering better outcomes to consumers.
I think the last decade has shown us that fintech is the external force that we needed. I think it's a time of great uncertainty. It's a time of a lot of pain, and it's a time for necessary change. And what happens during a crisis? Dreamers that are dreaming actually create, and builders build. That's what we do. So if there's one thing that could come out of this moment, it's that the once impossible is now possible, and that alone gives me hope. We should all have hope for a better future, and fintech helps me with that.
Perfect. And with that, I think our time is up. Thank you so much, everyone, for joining us for our very first LinkedIn Live. And if you like our content, please do subscribe to our newsletter, The FinTech Pros, as well as our podcast, One Vision, which is available on iTunes, Spotify, and Google Play. And make sure to catch all of us in the upcoming FinTech Talents Virtual on September 9th. You can register at fintechtalents.com/virtual North America. Thank you so much for joining us today, Lisa.
Thank you so much for having me, guys. Take care.
Ciao.
Cheers.